Good afternoon, everybody. It is Friday, September 15th, and I'm Dave Weisberger, CEO of CoinRoutes. It's time for This Week in Crypto. And, well, we passed the witching hour, the famous quad witching, where futures expire, options on futures expire, options on stocks expire, and options on single stock or single whatever futures expire. All that together happening in the equity markets and in the crypto markets. And the fireworks we saw were, well, not a whole lot. We saw a bit of a rally last night up into the middle of the range. So, in between the 26, 300 and 26,500 range today. And pretty much it sat there. Bitcoin over the last week, if you looked at it a week ago, it's up about 2%. Ether is flat. All coins are a bit squishy, some down a little bit, but mostly the market is really not doing very much. And this is the period of the time of the year, the first 2 weeks of September, that are traditionally about the weakest of that. And now we're past it. And generally a trend starts getting established in the second half of the month. We'll see. Because right now the volatility in the market is negligible. We are clearly seeing buy interest anytime Bitcoin drops below 26,000, and we are clearly seeing sell interest anytime it rallies. There is no great narrative to propel the story, and people are still worried about others, such as the Binance story that we'll talk about as we go through the news. So let's talk about the news, because the first story this week, it would make me laugh if it wasn't so sad. The SEC goes after their second NFT publisher. And this time, they nabbed Mila Kunis and Ashton Kutcher. And they went after something called stoner cats. And honestly, the best thing about this case was the dissent letter written by both Republican commissioners, which basically said that this SEC would have stopped Star Wars from selling collectibles when they first tried to fund the franchise. And the reality of the situation is, we're at a point now where if you're a small project, the SEC is not fighting the SEC just isn't worth it on a cost benefit basis. At the end of the day, what they're trying to do is say that collectibles or anything used to fund an enterprise is security, and then they have no rules to actually work with it. So it's kind of crazy. Another person I follow on X basically made the point that the average collectible startup effectively, if the SEC allowed its cheapest path to register, it will be more expensive to register than they're likely to make by selling the collectibles they're selling. So effectively, thank you to the SEC. There's no small businesses that can use this mechanism. And that's a bad thing, which was interesting because, once again, if you look on X, Congressman Davidson had a wonderful tweet, which I reposted, talking about the need to essentially support entrepreneurship and innovation. And this is what we always talk about. Reasonable rules, and we'll talk more about that, but reasonable rules that small companies could use, not just big companies creating rules to make barriers to entry to protect their own fiefdoms. But so be it. The fact of the matter is, it really doesn't mean a whole lot, except the first NFT case that actually gets challenged in court is probably when we're going to learn really where jurisdiction lies. I wish that wasn't the case. It should be done by Congress, but the reality is it will probably end up getting decided in the courts. So what's the second story? The second story I call more of the ongoing war of words. So there's two particular stories that I mean by this. The first one is absurd. Senator Sherrod Browns, who hopefully is in for a fight and hopefully will lose his seat either in the primaries or to a challenger from the Republican side in Ohio, sent a letter basically demanding more disclosures in order to stop crypto fraud. Now, if I just paused it there, I would say huzzah to Senator Brown. He's right. We do want more and better disclosures. But unfortunately, he kept going. And he said, more disclosures, but you should be able to use existing rules to get those disclosures and make things work so that people know what they're investing in and know where the risks are. Sorry, Senator, but we've well chronicled why that can't work. Let's make it very specific. The fact is, there's no SEC rule that applies to distributed autonomous organizations or DAOs. Corporate governance is involved, but if you don't have a corporate structure, there's no place to talk about how you set up a governance structure, how the voting structure works, how the assets are locked or not locked, how tokenomics works. None of this is available with existing rules, which is why many people in the industry want legislation and want new rules that work for crypto. So when you send these disingenuous letters that are impossible to comply with, they are the ultimate hypocrisy. I want to do something is great, but it reminds me of the use of the words thoughts and prayers when something tragic happens. People say that because they're not going to do anything, but they don't want to be seen saying nothing. Well, the reality is, if you want to do something, work with the bipartisan people that voted for the FIT Act. Work with Senators Lummis and Gillibrand. Work to try to create legislation that creates rules that work with crypto, and the industry will hop on and work with you. But if you keep saying that the existing regulation by enforcement could work, you literally are not paying attention, Senator. With that out of the way, the next piece that we get is our friend RCC Chair Gensler, once again, out on multiple public channels saying that the crypto industry is rife with misconduct and people who are intentionally breaking the law. Well, I've talked about this many times. Honestly, it rings hollow at this point. Focus on fraud, not going after people like the Kardashians or the stars of the 70s show. Honestly, it's not worth it to go after projects that have harmed nobody. Go after FTX. Oh, wait a minute. You had your chance and didn't. Go after frauds. Honestly, we cheer you on when you're prosecuting Do Kwon for what happened with Luna, but it would have been a hell of a lot better if you work with the industry at the beginning of your term to create rules such that the disclosures and the types of marketing he did were clearly in violation. That would have been better. But we do agree that there is a lot of misconduct, and we do agree that there should be, prosecution of fraud. I don't understand why the actions don't match that rhetoric, but so be it. Okay. Next story, which was kind of interesting earlier this week, is the FTX estate, I guess, or the FTX bankruptcy, in bankruptcy, has gotten approval to start selling their crypto assets. And this caused a little bit of a sell-off, which was kind of silly in Bitcoin and Ether because the amounts are tiny. I mean, easily absorbed, not a big deal. The only asset that they're selling that might matter is they're selling $1 billion worth of Solana. And that could matter quite a bit. But the reality is they're trying to do it slowly. They're trying to do it intelligently. They appointed a professional trading organization, Galaxy, to help them with the sale. So in all likelihood, the market impact will be minimized as long as there's enough demand for $1 billion worth of Solana, which if you look at the market, since it's only down 4% on the whole week and has recovered most of the initial loss, one gets the idea that there probably is that kind of demand if in fact it's handled well. In fact, typically when overhangs are removed from a market, it's very bullish. So when the sale is announced to being over, you could expect a price pop. Is essentially what I would say. I don't know when that'll be. If they're smart, they're not going to tell anybody, and it will be a long time before anybody knows what's going on. But the fact is nature is healing, and that sort of selling makes sense and really isn't necessarily such a bad thing. Next story is sort of a sad one. Genesis trading and derivative trading has stopped selling derivatives. And that's sad because, and I've been friends with multiple people in that company over the years, they were at one point the largest options trading house on the street. And they once provided an incredible service to many people who were trying to hedge their derivative risk. Over the years, they kind of lost their way. We saw what happened in terms of the lending arm and in terms of risk management, but the derivatives operation was always top notch, and it's sad for me to see it go. But life marches on. The last story, the one that got the most press this week, and I saved it for the end, is Binance. Now, the Binance story is actually important, but this week we saw many executive departures from Binance US, which I'd say is one of those stories like, okay. Well, the SEC, by going public with what they did without due process, effectively killed Binance US. Their volumes dropped to just about nothing. People all tried to pull their money off. It became almost impossible to operate, and probably is impossible to operate without some sort of legal settlement, but they didn't get to that point. And because Binance International is the big story that the vast majority of the crypto community are worried about, that is what's going on here. And so Binance US executives leaving, I see as no big deal, because honestly, you almost expected it given what was going on. Binance having attrition in the international firm as they're losing market share is also normal, and that's not a big deal. But what does matter is a resolution to the rumors that constantly keep circulating about the DOJ or Interpol or the FBI or somebody else or criminal behavior, etc. And the reason the rumor doesn't seem to be bothering the market so much is the market doesn't believe that Binance is trading on customer assets or has holes in their balance sheet with regard to customer assets. And as long as that is the case, if you shut Binance down, it would be bad for people who are trading in Binance futures derivatives market, which is still quite dominant in the marketplace. That would probably shift to OKX and Bybit and BitGet, etc. Wouldn't be a big deal. I mean, we saw this once before. We saw BitMEX get hammered, and the volume just seamlessly moved to Binance and FTX and others. I don't think it would be different here. The only real issue is if there are customer funds that could be lost. And I personally know nothing about this. What's interesting is there are people I respect who are saying, yes, customer funds will get lost, such as Mike Alfred, and many others who I respect who say, no, they've proven that they have reserves and no customer funds will be lost. So I don't have any opinion in this. I just think people need to monitor the situation and stay safe. I just think it is holding the entire market down, one of the reasons for low volatility. But this too shall pass eventually. In any case, now that we passed the triple witching or quad witching, one could expect a little bit more action in the market starting next week. Yeah, it might take another week or two. Sometimes the period of the Jewish holidays, which initiates tonight actually, is a period of depressed volatility in the markets historically. We'll see what happens, but I would expect within the next couple of episodes, we might start to see some action again. In any case, stay safe out there and enjoy your weekend, and Shana Tova to all my Jewish watchers. Bye-bye.